Chips and transaction management. Those are the areas that we have a couple of picks for you in the aggressive growth section. And Brian Bolan, our aggressive growth stock strategist, has spent hours uncovering these two here, let me tell you.
It's tough, you got to look all over for the best aggressive growth ideas. And when we're saying aggressive growth, I want something that's really going to move.
Right. It's really aggressive.
It's really aggressive. And I think, where the market is and everything, I want to get those high technology type stocks. And
Okay.
I think the first one is, fits right in line with that idea. Integrated device technology. So they are a component maker in that kind of chips, the semiconductor space. And I've previously had a mantra in my life of investing of, chips are for dips because of the cycles inside of semiconductors. You really can get burned, very easily. Should a new cycle come out maybe a little bit earlier than expected, or if one lasts longer. And then there's all sorts of accounting measures that the chip companies use that I'm not so gung-ho on, but they help them. So I like to stay away from the chips for the most part because I feel they're for dips. But this is
profound, Brian.
Well, most of my thoughts are.
Yes.
That make it onto air anyway.
Absolutely.
But what they do is timing. So when the motherboard and the other parts of the processors, the inputs and the outputs are put together, the integrated device technology all relates on the timing. So, I say that chips are for dips, but it's all about the timing. That's kind of the big idea here. This company has also had a lot of good beats recently. If I look at the size of the positive earnings surprise, so by what percentage have they beaten the expectation? We see it went from 40% to 0, so that was a time where they met expectations, and then to 50%. So if you kind of cancel out that last quarter where there was that meet, and think about the last 6 quarters, there was 5 beats, you're pretty happy with what you got going on there. It's also a number 1 ranked stock, so we know earnings estimates are moving higher. And if we take a quick look at that chart in there, I think that I made it just a month or so. You can see that there's been a real nice, steady upward trend on that name.
All right. Then this other company, and I'll try and pronounce this correctly, Synchronoss, right?
Sounds good to me.
Synchronoss. SNCR, the ticker, by the way. They're into on-demand transaction management. What the heck is that?
Yeah, I was looking through the statements to get a better idea and a handle on, how do you explain on-demand transaction management. So,
right. So how do you?
Yeah. Well, I was about to do that, Terry, but we've run out of time.
Yeah, right. Sorry, that's all we got. Okay.
So when people buy phones and tablets and all sorts of electronic gear today, you're always asked to register whatever this product is. Usually there's an activation fee that comes along with phones, tablets, anything that is going to be using the internet on a continuous basis.
Okay.
Companies have figured out that this is a way, just another revenue stream, maybe small, but it is out there for everything. And then worst case scenario, they can give you the kickback. Who manages that process? It's Synchronoss.
Oh, really? That's
so
what that means, on-demand transaction management.
Yeah, who knew?
Couldn't just say registering, activating your phones.
Right, you couldn't say that because another part of the business, what they have found that works very well, if you can do those things, if you can do those activations, is that you can also help manage their cloud products, if you will.
Okay.
So if you have a phone and you have a tablet and you have a computer and you have one document that you want to be able to view on the computer, the tablet, and the phone, they have technology that will do that much the same way Google has its Google Drive or that sort of thing. They give this capability back to those ISPs like the AT&T and Verizons of the world so that you can use their technology and become more ingratiated to them, and that's what they want more than they want you to have that for Google. Obviously, a number 1 ranked stock, earnings estimates moving higher, and again, technology play and an aggressive one at that. And we can see from the chart it is moving up quite nicely.
All right. Do you own either one of these?
I do not.
All right. It's always a pleasure, Brian. Thank you for bringing these 2 gems to us. We have other stock
Whatever
picks.
they are.
Other stock picks and stock picking strategies for your review on our website, Zacks.com. Link to them right off the homepage, and check back often because they change often on that homepage. With Brian, I'm Terry Ruffalo.